My name is Brian Fryer. I'm a nonprofit consulting principal at Grassi CPAs. And today we're going to be discussing environmental, social, and governance for nonprofits, or ESG. Examining a company not by its fiscal strength, but also its contribution to society has become a focal point of many organizations. For many organizations, there are tangible ways to commit to ESG initiatives. And we're going to talk about a bunch of those today. So first, we're going to talk about what ESG is. And obviously, we know the words environmental, social, and governance. But what does each of those letters exactly mean? And what are the tenets of those? How did we get here? What is the history of ESG? And how has that woven around multinational and other national frameworks? What are the actual standards, frameworks, and requirements of ESG right now, and how is that going to change in the future? What are the challenges and considerations for your organization as you move ahead, for your board, and how you operate, and for your donors as well? So what exactly is ESG? ESG basically is standards on stewardship of resources, the treatment of people, and the upholding the ethics and values of your organization. It's doing good while doing well. And your organization is not exempt from ESG initiatives just because they're doing well financially. It's a commitment to conducting business ethically. We'll talk about that a little later, what the history of that comes from, but it's practical communication of ESG as well. It's non-financial performance indicators. Just like your balance sheet, your income statement, and your cash flow statement, you also should have indicators of how well you are putting your ESG initiatives into practice. And it's also multifaceted, as evident by the fact that there's environmental, social, and government facets to the ESG initiatives. So let's just look a little bit at the E for environmental. Now, a lot of times what we think of ESG, we think about how we are extracting resources, particularly out of the ground, out of the earth, and how we're also managing other things as like our carbon footprint, water and waste management, greenhouse gas emissions, and biodiversity. This does tend to come into play with a lot of the larger corporations out there, particularly those that are extracting things out of the world. So environmental doesn't hit nonprofits too much. However, social and governance really do on an everyday basis. Nonprofits a lot of times focus in on social and governance issues. Social from the standpoint that a lot of nonprofit social organizations are already rooted in the S part of ESG, health and safety, labor standards, diversity. Sometimes those organizations are focused entirely on one portion of that social portion of ESG. From a governance standpoint, that relates a lot to your board. Board composition, equitable compensation, stakeholder engagement, and tax transparency are very important aspects of governance. Before we start talking about what ESG means for your organization, just a brief history on how we got to where we are. It's a key component of our world in 2022. It wasn't always like that, but there has been some watershed moments in the history of ESG. And even before the adoption of the term, there were focuses on sustainable development. In 1971, the first mutual fund for sustainable stocks was launched, and that was 51 years ago. So this has been in the works. And in 1977, there was a principle that was started called the Sullivan Principle, which was a code of conduct that large organizations would abide by. And there were two major watershed events also in the late 80s, the end of apartheid and the Exxon Valdez disaster that led to higher focus on environmental, social, and governance in businesses. And that led to the United Nations Development Program putting together 17 specific Sustainable Development Goals, or SDGs. And those were put together and they were rolled out in order to assist in eliminating global poverty and hunger and still achieving sustainable economic growth. This is not a zero-sum game. There are some places where ESG initiatives and FASB have intersected. A lot of those are related to environmental concerns. Topic 275, risks and uncertainties, is important. You could be subject to fines and penalties for environmental regulatory boards that you may need to put or disclose into your financial statements. Inventory and plant and equipment and goodwill might lead to some asset write-downs based upon some environmental regulatory issues as well. I want to focus on topic 740, income taxes, for 1 second because it deals with tax transparency, including good governance and what you're putting into your 990s as a nonprofit organization. Are you being as transparent as you possibly can? Are you being as informative as you possibly can? And also, are you disclosing any other unrelated business income that you may have as a nonprofit? Because you know that we are also subject to paying taxes on UBI. And now we have a background on where it intersects with accounting and a brief history on ESG. We'll talk about the challenges and considerations that the board, your donors, and your operating team may have. The board itself may think of ESG as a buzzword, so they might not be as up to what ESG initiatives are. There might be a reluctance to develop a culture of ESG within that organization. And that might just be because it's a passing fad, which it's not, or it's due to a lack of knowledge. So it's upon the organization, management of the organization, to identify and train the board on ESG initiatives. The difference between mission values and standard ESG values is key too. So while we might be introducing new ESG values into our organization, they may not intertwine necessarily with our mission. And then the issue of mission creep comes into play, where now you're extending yourself further than your mission and doing more than you're ready to do. So perhaps the board is not ready to add on to those initiatives, or perhaps you're not ready to add on to those initiatives. Either way, you need to see if they intertwine between mission and ESG, and if you can seamlessly incorporate new ESG initiatives without mission creep. Managing reputational risk is important. Your board is also key in identifying and mitigating certain risks within the organization. So if there's a lack of ESG initiatives at this time, for instance, if the community you're serving is not represented on your board or is not represented within your management team, that can lead to reputational risk within the community, not just the nonprofit community, but in your local community. Encouragement versus implementation. Now, this is where the rubber meets the road. The board could be encouraging in this work, but not willing to implement. And a lot of times that coincides with a lot of challenges that you have with boards to begin with. But you need to know if there are certain board members or certain people on your advisory board, if there is one, who are interested in helping put these initiatives together and implementing them with your management team. And without training, obviously, none of that can happen. So this could be an in-house training or an out-house training. But either way, there needs to be some sort of background to ESG initiatives in order to put proper implementation together. So while it's important that your board is fully locked in on this, remember, they're not doing the bulk of the work and the bulk of the day-to-day work when it comes to implementing ESG initiatives in your organization. That falls on your ED or CEO or your CFO or your director of operations or anybody who's sitting in that C-suite. So there are some challenges and considerations to achieve sustainable development within the nonprofit world. You need continuous self-assessment. Now, you may need to assign certain individuals within your organization who may be your operational folks, like your director of operations, who are assessing these initiatives just as they would assess program initiatives that are running at any given time. And with that assessment, you will need sound and efficient reporting, record keeping, and constant feedback on that reporting. Your relationship with the community is very important. One, because they are going to be the folks who tell you what you need to do, not just from a program standpoint, but from an ESG standpoint. They can help you build the framework for your organization. And again, as we mentioned before, making sure that your board is representative of the community and making sure that major stakeholders are represented in the community will make sure that that relationship is strong. You need to ensure that everybody else has a seat at the table. And that's where DEI comes into play. We talked about reputational risk when it comes to organizations not having leadership reflect that community. That is very, very important. Human capital development is human resources and the utilization of your workforce. Your workforce is your strongest asset, and they need to be taken care of. There is a focus on mental health in the workplace now, and that falls directly in the S of the ESG framework, the social. There are some sustainable business practices that you can put together. You are not a major organization that is focusing on sustainable business practices, but there are little things that you can do. From a procurement standpoint, you can focus in on MWBE vendors, minority and women's business enterprises, and the government and government vendors are helping us provide guidelines for hiring a certain amount of MWBEs. We can also eliminate conflicts of interest when choosing vendors. A lot of times we tend to go with a relationship or a board member who has an organization or a friend of an organization that can help the nonprofit. But let's try to eliminate conflicts of interest at all times so it doesn't look like there's any self-enrichment going on within your organization at all. Maintenance and grounds, you can foster and cultivate a green space on your campus. You could use alternative fuel sources when it comes to energy within the campus and efficient space utilization. And vehicles and transportation, again, using clean energy, but also making sure that you have safe driving practices in place. Insurance companies would like to know that as well, because they'll lower your premium if you are putting those safe things into place. Now, from a donor standpoint, About 10 years ago, there was about $30 trillion of sustainable investment on the market, which is a pretty large amount. Now it comes to 2022, that number is tenfold, which means that there is a market and an appetite for investors and donors with ESG initiatives. It's already out there and it's well established. So what does the development director or officer need to know about this? Well, they need to incorporate it into their planned giving with responsible investing. They need to communicate to larger donors or donors that they're cultivating and put milestones together for ESG initiatives, which they can meet and then foster further donations. Funders can even assist in adopting ESG initiatives. There might be a certain focus on a certain portion of ESG that a donor might have. And as long as it intertwines with the mission, again, we want to make sure that there's no mission creep here, then it's something that the donor can help us put together with their own resources. The recognition of ESG efforts tied to that, if they want to donate, then we can recognize this person as a champion of ESG initiatives, and that is always a big part of cultivating a donor relationship. And then optics and marketing opportunities, just to make sure that from a social media standpoint, the organization is putting out there that they are on the forefront of what organizations are doing regarding ESG. After looking at those challenges and considerations, what should you be asking yourself as a leader of a not-for-profit or a board member? There might be some portions of ESG that are relevant to your organization. How do you identify those? Can you identify those? And I think that's the key first thing to do before you start off on some initiatives. Can you effectively measure those metrics? Well, before you start, identify those initiatives and then see if you have the capacity, the headcount, anything to make sure that you can put these together and measure these initiatives effectively. Do the initiatives have synergy with your mission? We talked about this a bunch, and I think it's very important to reiterate. Mission creep is always a problem with nonprofits, and it leads to fiscal and operational cracks in the foundation. Adding on another initiative might add to more mission creep. So just be careful that there's synergy there. Does this also express the organization's values? Are you going into an ESG initiative for the sake of it, or does it truly express your organization's values? Do your donors have interest in it? If they do, find ways how they can help, and you can cultivate that relationship a little deeper. What are similar organizations doing? You can pull other organizations of your size, of your nonprofit industry, of your location, and then also look at first adopters in the area, namely larger organizations who may have already focused in and then you can take some cues off of. Do we want to incorporate ESG into our investment portfolio? You may have an endowment as a nonprofit and you may have already focused in on this because there's already $300 trillion invested into it. But if your portfolio is not it's in basic blue chip stocks or in petroleum stocks like a BP or an ExxonMobil, you might want to consider putting some ESG stocks or sustainable stocks into your portfolio. That concludes our presentation on ESG for nonprofits. I hope this was informative and interesting. And if you have any further questions, feel free to contact us. Thank you.